What is up, everybody? We will be going over the August 24 top ops dissected, and as I tweeted, August was a pretty damn incredible month, certainly for me, my not so humble brag, but I had my best trading day, week, month by a mile thanks to the August panic, and I felt that the end of August was pretty damn slow by comparison, and recording this in early September 24, I think even so far September has been slow. So maybe we're going to get a pause in volatility and some of the opportunities. We will see, but this market has surprised me all year so far. And one thing I will say to give some perspective, I started trading in 2011, and so what is that? I mean, almost, is this my 14th year or so? Actual trading year? If I had to rank them all, I would say this year might actually be maybe the third best year I've seen. So overall, pretty damn opportunistic for the stuff I look for, and volatility, trends, themes, a lot of year left. So anywho, I did create the two videos on the August 5th panic. One was my thoughts ahead that I recorded the night before. My other video was for Manic Monday Dissected, and I released that, I believe, on August 5th, the day of the actual trading. And so the nice part now is a lot more time has passed, so I can actually go back and follow up on other trades I did and some final thoughts that I might not have touched initially on this. So that being said, let's go into this. The first thing I would point out is like this, so many of these trended so well. And when you get these huge epic panics, I mean, it was tough because I had to go swing, I had to go film the course in Los Angeles, which allowed me to swing way less size than I otherwise would have, but I still wanted to, on a capitulation this big, swing at least some size. And even myself, I'm still improving my trading game, and so I'm trying to get comfortable swinging more and more size. It's kind of tough though, just because I care about a lot about my sleep and my presence and everything else. So I try to swing an amount of size that I'm comfortable not checking the market all the time with, and it's not going to affect my sleep. That's kind of like my little rule of thumb, is if I have too much size where it's going to negatively impact my sleep and I'm going to be up all night, I don't really do that. So what I did do is I went epic beast mode size on the huge panic, but then I probably ended up swinging, maybe I swung like 25% of that size or 20%, and gave a good chunk of it to prior bar lows. So there were some positions like this NKD, I was holding probably, I think I might have held that all the way up to here, which is an incredible hold. I don't know if I've ever had a hold like some of that. And even stuff like the VIX, which I'm going to get a lot more into, this VIX was incredible. I mean, I didn't hold anything all the way down here, but I held a chunk of it into, I think probably like the mid 50s, which of course, you know, given how well this stuff worked out, I held way less than I wanted, but nevertheless, that was improvement for me. One other thing I'll touch on based on that is I did a tweet last week about the gap and the gain. As traders and high performance individuals, so many of us are always measuring ourselves to the gap of how we could have performed. Oh man, if I just held all my size, or if I just held 50% as a swing rather than 25% or 20%, oh man, I could have done so much better. I could have done this, I could have done that, rather than focusing on the gain, meaning the progress we've made from where we came from. Everyone always feels some level of regret, even though I had my best trade, week, month, whatever, ever, I still have that tendency to kick myself like, oh my God, Lance, like, why did you wimp out at the end? Why didn't you swing more? Like, that should have taken priority over the filming and everything else. Like, this was such a good opportunity. But I turn that voice off and focus on all the things I did well and learn the lessons that I need to. And there's a right balance where you just simply learn the lessons that you could have improved on, and you just don't beat yourself up. And instead, then I want to just focus on the gain, where it's like, I did a lot of things really fantastic in that thing. You know, I do think this is the proudest trade of my career for many reasons, the least of which is how public I was in my views on this. But anywho, some of the stuff like Bank of America held really well. And again, I mean, I was taking so keep in mind, like, yes, the true stop is prior bar lows, but the expected value when you've gotten all the way up here is not the same as it is lower. And some of the future videos I'm doing kind of covers that topic. So yes, I held a core to a good distance, but nevertheless, I'm still reducing exposure. Like, especially on this day when you're approaching 38 and change, and this has retraced a huge amount of the overall move, I don't think there's anything wrong with selling some on the upper range of this bar just because your stop is so far away still. But anywho, this stuff worked phenomenally well. And one of the trades that I wanted to talk about most was the VIX. because there were really two interesting things that happened. So this is the 8-5 and the 8-6 are really, really interesting. And now big picture, obviously we knew the VIX absolutely exploded. The futures were exploding and everything else. The futures I'm just looking at /VX, essentially over a doubling in the VIX futures. Now though, nevertheless, I was pretty much trading VXX. And so let me go to the 5th and the 6th because it was really, really interesting. And I think on the 6th was maybe one of the best follow-up opportunities post August 5th. So let me see. Most of the capitulation happened pre-market. Then the VIX paired back a ton. This day is the top on the 5th. And so then what we got that was super interesting is we got some hardcore buying in the VIX into the close. And what was really happening was the VIX futures, there was a massive print into the close on this. Like that is a huge volume print. And so I don't know if somebody was forced covering or if somebody was just doing some mega hedging or what, but somebody was just buying the shit out of VIX futures on that closing print. So what ended up happening is there was just this endless bid where like it would retrace a little bit, it would push. So what I was doing is I was shorting some of these turns and kind of scalping a little bit and making, just covering prior bar highs. Then we make another leg. So so this is leg 1, this is mini leg 2, this is leg 3. So I shorted the shit out of this turn because like this was such a huge retracement of that overall move when I felt like, okay, the panic's pretty much over. We had peak panic in the morning, so we pretty much retraced that all the way back, and it just felt like it was this one buyer, and I'm fairly certain it was just someone jammed up in the VIX futures given that huge print. So I got huge size short on this, and even into the close I'm already covering a chunk there. I'm covering more after hours. Then like even towards the end of after hours trading, this really started to unwind. So I was already covering huge chunks because to not take any overnight risk, to be able to sleep at night, I will take a quick surefire 10 points, no problem. I was happy to do that. So nevertheless, this short was scary, right? Who knows what's going to happen, at least in regards of the overnight, right? It's super scary because, of course I'm going to be sleeping. I guess I could have done VIX futures, which would have me be able to better execute after hours most likely and overnight. But this overall I felt was just so likely to just be, oh my God, someone is being a chump and buying the shit out of the VIX way too late after the panic. The time to buy volatility and protection is before the panic, not when it's gone up by over 100% in like 2 days. Anywho, sure enough, so one thing I forgot, the spiders during this move, like the market, right? Because the VIX is just S&P volatility essentially. The spiders had been doing nearly nothing while that move was occurring. And so like, yes, the market did sell off, but I felt like it was the VIX wagging the tail on this, because what you would get is like, the spiders would kind of try to bounce and then the VIX was just ripping higher. I'm not going to bother overlaying the charts, but like it really felt like, oh my God, this VIX is just being ripped, and the S&P was staying relatively flat. Now, what I would highlight even more was the next day we gapped down, markets are kind of bouncing, but then something interesting happened again at exactly the same time nearly when this started the prior day, right? So if we go back, I would say like 2:30-ish, this 2:30, like yes, I recognize that we were bouncing, but this is when like things started to get really aggressive and more aggressive into the close. So this next day, we kind of get a similar thing, and then look at this absolute blowout in the VIX. And again, we were getting a massive print on the VIX futures. Now look what the S&P did, right? The VIX is just going nuts. Yes, on this day, the S&P again sells off and follows that same pattern, but it's nothing as extreme as what that VIX did, right? The VXX shot crazy distance. That's massive for how much this had compressed. And again, like yes, the market is moving, but the feel on this was that it was the VIX wagging the tail on this. And so if you can short into this spike, again, like it's just the same pattern as the prior day, and it's like you don't necessarily get the chance to see patterns 5 or 6 times, right? My hypothesis the prior day was, wow, massive print in VIX volatility and VIX futures, and that this was kind of dragging and holding back the S&P. Then when you get the same exact thing and this huge spike right at the close, that's opportunity there. So I did short like another big chunk, and that's also the benefit of playing the ranges, is like, let me jump to the daily chart real quick, right? When this is retraced so much intraday, you do not want the same size at 63 that you had at 90 or 85, right? Because so much meat is off the bone and my stop is all the way back there. So yes, keep in mind, I do tend to have a true stop of prior bar highs, but that doesn't mean the expected value isn't changing under it, right? The expected value at 62, when my stop is up at 80 and this is retraced so much, is not that great. So I was taking huge covers down towards the bottom of this range. Then I was able to reshort, and then the next day we're all the way back down there and I'm taking covers again. And that almost proves my point. Like, you know, so much was the end of the day, we'd rip up on the VIX futures move, we'd gap down because it was exhausted, you know, it was just someone getting that print, we would fade all day, then boom, we would shoot up into the close and huge gap down. So that was the pattern, and I was super on top of that. You know, like, you can't expect to see things 5, 6, 7 times. It's just not gonna last. So that was really interesting to me in the VIX. And again, a lot of the concept here is that once you get that mega capitulation, which this day was, I generally find that the odds are favorable that that holds, and that you tend to hold prior bar highs and trend lower and mean revert. With that concept in mind, I epic crushed this Apple. So again, same concept, right? Apple had gapped down over 10% on the Buffett sale, which is absurd, right? Apple should not be moving 10% on that. You know, like, that is an enormous move for Apple. The fundamental value of the company did not change because Buffett ended up overweight and trimmed some. Now, what's interesting though, is if my theory is that this, you know, capitulation low tends to hold, it's interesting what happened on 8-6. Okay, with that daily chart in mind, let me pull this up. Apple bounced amazingly well on the 5th, as it really should have, because it's one of the most boring, stable, sought after companies. So that bounced very, very well. There was a headline later in the day, but we kind of retraced that anyways. Now what I want to point out though, is we closed pretty damn strong. Then what happens the next day is we gap down and then off the open. So we probably gapped down 5 points or so, right? We closed at about 211-ish. I don't know if that's the exact print, but yeah, I mean, we closed at like 2.9, 210, but we really settled in like 210 to 211. You know, given that after hours is just level, like, that's, again, this stuff isn't like some science, but I would say that like this is the equilibrium of where Apple settled into, right? A little bit above a couple points. We have some stuff below. I would say anything like 210-ish is kind of the equilibrium. So then what happens the next day is we gap down like about 4 points or so, and we then melt in a nice holding prior bar highs. We melt a symmetric $4. The odds of this move, like, one, I love this intraday. Number two, I love this daily, and the probability of this being a higher low on the daily, given that capitulation, is so high to me. So especially as it started to flush down to 201 and then the 202s, I just went apeshit on this, thinking, oh my God. Now let me jump back again. Because, I mean, well, long story short, this bounced just immediately and super well. Like, this Apple trade buying into this down move, this was so high probability to me. Like, I would say this was like an 80% win rate, and just on day one, the reward was like 8 points. Now, let me highlight on this daily a little bit more. First of all, this is like peak panic. Like, anything below 198, 199, that is an insane level of panic that was going on in the market. Major dislocations, like pets' heads were falling off. Everything was fully panic at these sub $200 levels. So for you to get another shot at Apple at 201 or 202, now keep in mind, $200 was the huge Apple breakout. Huge Apple breakout. So essentially, anything sub 200 was during peak insane panic. We bounce insanely strong up towards 215 to then get another swing at the bat at 201 and 202 after that bounce. And when it's not peak panic anymore, and the VIX, you know, is way lower and everything is kind of chilling out, like, that is an amazing buy. So I was able to sell a shit ton in the 209s, and then I held a bunch, using it as a swing against prior daily lows. I didn't hold it, you know, all the way up to here like I should have, you know, because again, like, I don't reasonably expect a 100% plus retracement. Like, even like 215 or so is pretty damn nice. Anything in these teens, or even, I don't remember where exactly I got flat, but like anything in this area is just gravy. Because again, I think in practical terms, like the odds of this getting below 200 again is just so low to me. This was peak panic prices. So this Apple was just such a high probability next day trade. Like that really was for me the easy money layup. This and the VIX were really, really nice. So that's why I wanted to belabor these points so much. Now, SMCI. So a couple trades happened in SMCI. Some I think were more interesting than others. And this SMCI, the first one, is going to come up on 8-6. So this SMCI had earnings after hours. There was a lot of anticipation that they would do a reverse split. For those that don't know, reverse splits tend to send these stocks rocketing higher. Very classic with Tesla, with Nvidia. It doesn't make any sense really in finance theory. Like in traditional finance theory, you're just changing the shares of the company. Like in theory, it's more accessible to smaller traders. But we're talking multi-billion-dollar companies like Tesla, Nvidia, and this. And so it really should not be moving the stock price, but it is. The thing though is when you see that headline, it's no surprise that this explodes higher. But then the reality is the earnings were actually garbage. So I think there's a bunch of trades to be made in this. One, you can be buying the reverse split headline. Two, if you think, oh my God, these earnings were garbage, this was just all the people like the Lances out there buying this headline, you can short that break of prior bar lows, and that move works really well. But then what's interesting is we retrace a huge amount. This is a very, very weak bounce here. So I think it's totally reasonable to short 630 or the unaffected price, what I call a reference trade, at 620. So you can potentially do the long here. You can do the short there. You can also do a short at 630 or a short at 620. And again, on all of these, I'd pretty much be giving prior bar highs or prior bar lows or whatever as the case may be. I don't love trading earnings that much, but this one is something I would have been pretty interested and aware of. So I don't think this is some huge home run anywhere just because I don't find myself comfortable trading big size after hours on earnings reports. But this was an exception that was pretty interesting to me and had many offerings for those of you that are interested in this. And I always try to give a different smattering of spattering. I don't know what the word is. Scattering? No, that's not it. I try to give a different bunch of trading ideas and concepts to introduce. The other thing I wanted to pull up now is Lumen. So this was an amazing trade for me. I mean, it's hard to believe that this came, I think, like a day after the August 5th panic. So for context, Lumen is actually a very large market cap and an enormous enterprise value company. They have a huge amount of debt. Off my head, I think it's something like 20 billion of debt. And this company is pretty damn beaten down. Let me pull up a big picture. Yeah, so this used to be an okay company. Now it just got beat to shit and is near bankrupt because of that debt load. They started to get some fiber deals from some larger players. And so then all of a sudden they started to spin it as AI. At the end of the day, they're fiber, it's cable. That doesn't mean the deals aren't meaningful, but it's in my personal opinion, not that I want to be analyst, but a move from $1 to 3.5 was crazy. Then we, really go nuts on the earnings report. And that's what I want to talk about. And so this day, I don't want anything to do with it, right? Enormous volume. This had news on a contract ahead of their earnings, I think it was. So now let's go to 8-6. But the big picture context is this stock is making a massive move on some of this news. So what happened is they report earnings after hours, and they ended up blowing out on their free cash flow guide. Nevertheless, like a lot of the other numbers weren't that great, and a lot of that blowout was because, one, it was kind of already foreshadowed by the deals already being out, and then some of that was also because of this tax impairment. Long story short, was there like the headline seemed like, oh my God, this company is making a shit ton of free cash flow, even though that was not necessarily going to be the case going forward. And the earnings comes out, and what ends up happening is I think it was an ARCA buyer, and that's why reading the box and the tape is so important. There was an ARCA buyer just driving the shit out of this thing for enormous all-you-can-eat volume. And so I know there's a lot of debate of like, oh man, did somebody think it was the free cash flow yield and misread some of the earnings? Was it just some of the massive open interest in the options hedging? I know Nate was saying stuff about like the inability to roll over the options because that was the highest strike at the time. Truth be told, I don't understand that logic necessarily, just because people regardless wouldn't have been able to hedge after hours, but I guess they couldn't roll them up ahead. I don't know. And a lot of this stuff is really hard to prove one way or the other. And it's also just not that important to the trade anyways. So what was happening is you get this ARCA buyer just driving it really, really high. And so I don't want to fight this too much, even though we got overextended. Like, so I did take I think a stab on this turn of prior bar lows, but then I took a small loss. But now at like 850 plus, this is an enormous big picture move. And the thing is like, again, I don't want to be an analyst, but like, you know, for a stock to go from 1 to 8 and then just have one buyer driving the stock when ultimately the financials were otherwise eroding, minus the deals that were already announced kind of earlier, this move seemed pretty damn crazy. So the thing is that ARCA buyer at like 850, he just kept coming back. And so one thing you don't want to do is you got to be really careful of churning yourself, where you short, you know, once he drops, you cover 870s, you short 830s, you cover $9, you short, you know, oh, it starts to roll over and the ARCA buyer's still there at $8, then we squeeze again. So you got to be really careful of doing a shit ton of damage to yourself. Because that ARCA kept on dropping and coming back, and because it was clear that this guy was doing real deal volume, what I ended up doing was I shorted an amount that I would be comfortable just holding big picture, where it's one of those things where if this went higher, like if this went to $10, I would have been happy as a pig in shit, because then it just means, oh my god, I'm gonna short so much more. And so as long as this buyer was in, I wasn't going that heavy. I was probably short maybe, I don't know, 100,000, maybe 200,000. It was an amount where it's like, okay, even if we go to 10, 11, 12, I'm totally fine. And when it was squeezing, honestly, I had offers in, so I'm even just starting to get into the 100 or 200,000 on the pops. The worst thing you can do is if the pattern is the buyer drops, you short it down, then he comes back and you cover high. Like, it's fine to fall for it once. Like, I fell for it back here, I think, you know, I don't recall, you know, it's been almost a month now, but I shorted some, the buyer stayed, and I covered. And maybe you short some here and you cover. But like, what you don't want to do is, if that's the pattern, you just don't want to keep on falling for that trap and taking all those paper cuts. Once that's happening, you need to reassess and say like, wait, that is the least optimal strategy for me to do. I need to be doing the opposite. And what that tends to be is like, okay, size way down and holding a core that's comfortable for your risk limits. So that's kind of what I did. What then ended up happening is the buyer, after around this, I think after this 850, once we got below here, around like 515-ish, that's when the buyer appeared to be gone. And I was cautious just because, again, you don't want to keep on trapping yourself. But once I saw how we reacted at 8, if he was still there, it was kind of hard to tell. It was not the same level of aggressiveness. So once we started to get below 8, then hold below 8 with no signs of the buyer in here, like this was where I started to really size up and add some big size on. Now, when we pull back towards 650, I'm fine starting to take some size off, because at this point, like, we've really retraced over half the move, you know, so into 650, 660, 670, all this range here, I was taking size off because I did want leeway just in case we opened up at like $8 or $9 or God knows what, you know, maybe it catches some silly upgrade and does something stupid. So I would say in general, if I was short couple 100,000 in the slop, I maybe got up to maybe 300-ish. And then even by down here though, I'm covering 100, 150 just because the overnight is kind of dicey. But then what I want to point out is a couple things. Let's just go back to the daily. Part of this I wanted to do, and for what it's worth, like the next day, you know, we do open up at 720s. And so that's the type of thing where it's like on that 8-7, my thought is, again, someone blew up or someone just like, you know, full margin call, delta hedging, some type of force buying for millions of shares occurred after hours. That to me was the capitulation. And again, that should be the common theme. So often, whether it's GME or the Nikkei panics, I'm just like, I'm waiting for just the forced panic liquidation meltdown. And then once that subsides, that's when I'm taking my stand. So someone got blown the hell out or something, that ARCA buyer after hours. So then I'm like, okay, I assume the top is in. And again, I have a stop, you know, if I want, I can take those highs. So I had already reduced. Then when we pop up to, you know, the high 7s, I don't mind reshorting into there. Now, the other thing that I'm doing is I sold a shit ton of call options in this. The volatility was so crazy jacked on this day. Now keep in mind, this is a stock that has gone from $1 to $7, $8, or $8. And like there is a price where I just want huge size. It's tough to explain. Like there's times when I'm somewhat comfortable dabbling in the fundamentals. And it's like this to me, the probability that this move is fundamentally justified when we're at like even 6+, 7+, 8+, it's so low probability to me that this won't have some form of retracement. So much of this news was already foreshadowed. What ends up happening is the call options were like just ridiculously priced. Ridiculous. So it's like, would I want a couple 100,000 shares at 10+? Yes, absolutely. I would make so many points on that. The risk reward, in my view, with my feel for everything being mentioned, it's just like the odds of that happening are so unlikely, but if they do, I feel like the odds of me making money on this going to 10+ is like 95%, because even this was like an 80-90% trade to me. Long story short, the premiums were crazy. Like I think I was getting like $1.70 for like $10 or something. Don't quote me on that. That's just off the top of my head. But I was getting like crazy premiums. The other way to think about some of this stuff is I was looking at the premium as a percentage of the stock price too. So again, don't quote me on the prices, but say I'm able to get like $2 for the $10 calls, like maybe it was September $10 or maybe they were August $10. I don't remember. But say I can get $2 for it. This stock is at like 7 something. You're almost getting 30% of the share price. So like me selling a call for $2 is the same as me shorting at 7 and holding it all the way back to 5, which would be like a decent hold. Except the difference is if this is like an 80% trade shorting at 7 and making $2, me selling the calls is probably like a 95% trade. So I think the expected value on that is just so incredibly good. I was loving that. Like I can't stress that enough. Yes, it was probably partially that this came on the back of the August 5th panic. So I had just, huge win, huge cushion, but like the expected value on selling those calls, I really do think was one of the best things. It was definitely one of the better trades this year. Like I felt super confident on that given everything. So anywho, I did hold a really decent core to prior bar highs, which was great. That's awesome. You don't even need to be a hero, honestly. Even if you just short a few thousand shares and you make, say, your 2 points or whatever, like 3 points, that is an awesome trade. The way to dabble in this is not by being a hero, but by simply making the right trade for small size and growing over time. So what I did is I had my after hours short, I covered some, I re-shorted on that pop. I'm definitely taking covers intra bar. Like this is no different than that VIX example I gave, but where I'm then getting out fully is there. Then what I've done since is as this then pulled back into here, I ended up just selling, I think these were like August 20th or something, or maybe they were, I don't remember, but whatever maybe they were August 23s. But whatever I had sold way higher ended up expiring worthless. So then once those expire worthless, I then just resell more when we were still up here. So I sold more, and then Kerrisdale short comes out, and like the Kerrisdale short report that came out, that pretty much just like confirmed everything that I personally viewed about this stock fundamentally. Who knows who's right or wrong, but I would say my view was in agreement with Kerrisdale. It's not coincidental that Kerrisdale is like, oh my God, this is a worthless, indebted, bankrupt piece of shit. And the point is, right, on a lot of these trades that I do, I'm getting all the people in alignment, right? Fundamental value people think it's an overvalued piece of shit. The short sellers think it's an overvalued piece of shit. The type of person that should be buying a stock that has gone up 8x in like a month, that's dangerous territory to be in. So many people, when I'm shorting, everyone's on my side. Just like when the Nikkei has panicked a zillion percent and made the biggest move ever, who the hell wants to sell the Nikkei after the biggest move it's done in like 30 years? Like the time is to sell before the biggest move, not after. The time to be long on this stock, if you think it's going to get all these deals, is like at $2, not even at $3. Even $3 is probably a chase. So long story short, this Lumen I thought was amazing. Let's jump to the Kerrisdale day, which was 8-27. I don't think there was anything so crazy here. So yeah, the report came out, I believe 9 a.m. There's not, unless I'm getting first prints, there's not much I love here. And even this rollover, I'm not really shorting this rollover. What does potentially interest me a little bit more is this roll later in the day, just because we've kind of, this was our bounce attempt. We then start to make lower highs. Then we start to make the roll pretty tight, holding that moving average. So at least when we roll over here, here, there's hours of consolidation. So I don't mind this short. I mean, I don't think it's amazing. Realistically, I didn't touch anything. Well, actually, I think I was on my meditation retreat this day anyways. But even if I wasn't, I wouldn't have really done much on this. Just pointing it out to highlight some of these moves and why I'm not trading these. Okay, let's do Sava now. This stock was exploding. This does, I think, Alzheimer drug, so this stock used to be way higher. Then they had controversy that they fudged some of their drug data. The stock had been in the shitter ever since. Supposedly, they argue, oh, the drug is still efficacious, blah, 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 blah. Into this up move, they were announcing that they had a conference scheduled for 8-8, this day here, where they were going to go over some of the drug data. And so this is a really big move, and this day is the very big capitulation day. Notice the huge spike in volume, especially adjusted for price and how much higher we are. And it's a lot of ground to cover. And the other thing I would touch on big picture real quick, we don't know the data or anything else yet, but essentially the stock has retraced a huge amount of the down move, which I kind of consider. But then I want to touch on this 8-5 and 8-6 with that daily picture in mind. First of all, the daily trend was up on 8-5. This chart here, you need to be open-minded. I know a lot of people only think short, but I'm just looking to listen to the technicals and the charts. The stock is super strong. We kind of make highs at around 29 bucks. We consolidate, we start to make a higher high, higher low, higher high, higher low, and we curl and then break that $29 resistance. If you're short, there's no reason not to cover that. I would even argue that this is a totally reasonable long. I think this long is totally reasonable. And then what you're going to see is that this long isn't so different than one that I'm going to cover in GNLN later on. So yeah, this is a potential long. We then kind of just go. None of this stuff is clean enough for me. I'm not touching any of this long or short. So then we're consolidating, holding up really nice, but then we crack. That is kind of like a death candle. And then we just zero ability to bounce, and then we just melt. So we go from 42 something to 34. Again, I don't think I would have touched any short in there, and I think I would have missed this move, but that's fine. The point is, this made a huge capitulatory high volume move on the daily. Then we cracked 10 points here. Now the next day, that's where I think this opening pop, like 37 to 38, this is really interesting to structure as a potential lower high against the 42 bucks from the prior day. Again, going back to this on the daily, essentially super run up. We go from 12 to 42 in about a week. This bar is the high volume. We're doing almost 2x the prior day and 2x the prior day of that. We then go super strong, but then we crack hard. We gap up to around 37, 38, especially if we gapped up like 36-ish and drove to 40. I would have loved shorting that against 42 bucks. That is just the odds of this being the high, I think is favorable. Then you can risk a couple points to potentially make big points. The moving average is so far away. Like at this point in time, the moving average is still at $17. So if I can risk, I mean, even at 38, you're risking 4 points. That's good. But like 39 or 40 on a quick drive off the open would have been so nice against 42 to catch this big picture swing lower. I don't think this was like the most amazing move ever, but I think it was decent enough to at least cover, and especially because it brings up that lower high concept we've touched on a bunch. Okay, so that was that. Now we're going to jump to PCRX. Here's the daily. This is a biotech company. They have their one drug, Exparel, no idea how to pronounce it. And so 8-9 is when the news happens. So essentially, a lot of these biotech companies, they have their kind of one cash cow drug, and they have the patents for this drug that protects their exclusivity to get paid on it. What ends up happening is some of these patents can be contested in court. Essentially, a court ruled that their 495 patent was invalid. And if you can catch that headline, I know there's not like a ton of time, like the volume is 150,000 plus, but if you can catch that, this move is just enormous. I don't think this is so easy to catch. Like one, you gotta be on top of the court ruling, you gotta know what to look. But the bigger question I wanna raise ways with this example is like, how do you prepare for this type of thing? Because I think most people will just like not even know about this or be prepared. Truth be told, some of these patent things or any of the court rulings can be really, really hard. Like I wish there was some easy answer where it's like, oh my God, here's all the expected court rulings for all the biotechs and mergers and all this other stuff. You really got to put the legwork in. There's different biotech notes, or like, I mean, there's biorunup.com as a website. There's Stat News and Adam Feuerstein, who does really good covering some of this stuff. You can find out some of this stuff on CNBC. Like sometimes CNBC will cover some of the patents. A lot of it is just reading the news a ton. There's no easy way. If there was an easy way to find out about some of these rulings, there would be no edge in it because then everybody would know about it. For those that want to delve into this, there can be a fair amount of money in it, but the moat around it is just simply spending the time to figure out and know the landscape. What are the expectations for the ruling? What's at stake in the ruling? And biotech world is pretty rife with some of this stuff. Mergers and acquisitions, right? Like earlier in the year, God, was this still this year? My God, I think it was. Yeah, it was in January. We had the Save merger get rejected by JetBlue by a court. So the bigger picture is I'm using this example to just say like, you need to put the legwork in if this is a moat you want to build, but there's no easy way to just know all these rulings that are due. Now we're going to go to GNLN. This is a micro cap for sure. And essentially on this day, this 8-12 that I'm going to cover, it ended up coming out that they got some order of interest. I don't remember, some letter for like fentanyl test strips. Who knows what bullshit. I don't quite recall at this point. And it really doesn't matter. Like, yes, I acknowledge the news is bullshit. I'm not here to. In microcap world, I'm not trying to overly play analyst. It's like this weird art and science. Long story short, 8:30 or so. So the headline comes out. First of all, just being long on that, we hold prior bar lows for a while. We then consolidate pretty nicely. So here's one thing I will say. This setup here with this pre-market move and everything, this reminds me so much of VVOS and the same deal where people were just shorting the shit out of this. Like the stock goes from $2 to almost 11. We then hold up in probably that upper third, right? This is so similar to that VVOS chart. Maybe I'll pull this VVOS chart after this, but just focus here, right? We make this huge move. We consolidate straight across. We try to break down. We don't give much, right? So this is a low. Then we start to hold a higher range, higher low, higher range. We do this almost mini attempt to break down. We reclaim. Then the volume is really, really increasing. Then boom. Whether you buy, the intraday highs or even including the pre-market, I don't know if there's a right answer, but that buy holding prior bar lows is a beautiful multi-point move, which is awesome. Then like this consolidation isn't tight enough for me to be super interested in this, mostly because of this bar and all that. It is a good amount of distance, but I just don't like this break here. I'm not super opposed though to buying this. I just don't love it. It's fine. Then happens around here, the stock ends up having an offering. An offering for a company this size can be super brutal. This was a sizable offering. So there's then a second short, or it's not a second, but there's another opportunity to actually then short this and giving it prior bar highs. You can make a really nice leg there. So in summary, what I want to say is like there's the news headline which held prior bar lows. Then this chart reminds me of VVOS intraday, which I'm going to go to in a second. This breakout is very similar to VVOS here. Then you get the third op, which is the offering. Keep this picture in mind. Right here, it is a micro cap. It is, I guess, biotech-esque. I mean, I'm embarrassed to even call it that. It's not really biotech, but anywho. But now let's go to the VVOS with this intraday in mind. And this was on 11-29-23. What happened was this stock had its pre-market news. It makes its nice leg. It's consolidating straight across. It kind of made another leg there. So then this consolidation patch is what I view as extremely similar to the GNLN, where, we mostly consolidate across. We try to break down. There's almost this roll. Then there's almost that final crack. It reclaims and everyone's just kind of stuffed. So yeah, like the price action trumps all. That's why I want to bring that up. So now ASTS is an interesting interesting one. And this is actually a good teaching lesson. This ASTS, and again, it's so much about making analogies. This ASTS on 8-15 and 8-16 kind of reminds me of Avogo on these 2 days, right? So let me go 5:26 and 5:30 of 23. Bear with me. This is going to be worth it because this is an even better analogy. Oh man, because I did a split, this chart might be messed up. Okay, no, this is good enough. Just notice the slope of this. No, if I lose it, just notice how steady and notice how this is holding the moving average pretty much the whole time. We never get overextended anywhere. Where we do end up getting overextended, oh shit, it keeps on doing that. Okay, I'm not going to be able to show this, but you saw how steady that was, right? And then it does that huge euphoric move. So now I want to pull up and compare and contrast 8:15 and 8:16. So now this ASTS chart actually made it into magnum opus. Even though the stock has gone from 2 to 22, notice how relatively steady that it got there. Like we would have one big up bar, it would then consolidate straight across. Big up bar, consolidate, 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 big up bar, smaller up bar, consolidate. What happened though was then we caught an upgrade on this 8:15 and now this made a euphoric move. Like notice how pretty much none of this is above the Bollinger Band. Now we make a really, really big move on the daily. We're going to be looking at these 2 days, 8:15 and 8:16, because it's the same exact lesson as that Avogo. So many traders lose their shirts not doing this, which is exactly why it made it into magnum opus and I'm covering it here. So 8-15, when it got this upgrade, I think it was UBS. I can't remember. It doesn't matter. It's making a big move, right? We go from 21 all the way to 33, but where is it over the Bollinger Bands? Where are we really far away from the moving average? It's a huge move, but it's very steady and doesn't capitulate anywhere. This is more aggressive than the AVGO steady day, slightly, but overall the slope, we start aggressive off the open, but then we just start to take a less aggressive slope, and then nothing. Now, I don't want to be short anywhere on this chart. It doesn't matter the percent move it's making. It doesn't matter how big it is on the daily. Nowhere is this a good intraday chart to short. So I did not touch it anywhere. Now, let's look at this day. Not that this is way, 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 way better, but it's marginally better, is this then goes from 30 to 37 in 30 minutes, right? So we go 7 points in 30 minutes, which is, kind of a better pace than this, right? So for us to go seven points, it took us a couple hours. And so it's not just the distance we cover, but then we held so cleanly these prior bar lows. So the intraday finally got me interested. I agree, it's not above the Bollinger Band. This is not an A+ by any means, but what I really like is it's still a really big move. It's day 2. The volume doesn't really capitulate either. So again, I'm weighing the pros and the cons. And in my view, this was worth a short, but it's because of all these cons, it's not like an A or an A+ or anything. I would give this a B. But because it's such a big move, it's day 2 where there isn't fresh news, and this holds prior bar lows so well, I do think that once this turns, like a short in here or even in there is totally reasonable against prior bar highs. And this ends up working super, super, super well. And what I'd also say is once this does turn, that made a really huge move the prior day. It's not that crazy for this to unwind like this. And once it starts to gain traction, this goes so smooth back to the moving average. That itself is a tell how smoothly we got there. So it doesn't fully surprise me that we made it through this lower Bollinger Band. I do think this worked out exceptionally well. And I do think, honestly, we go so far extended, and this is the big volume bar. If I recall, I did end up flipping long here. The long didn't work out. I think I took some loss here, then it rolled over anyways. But yeah, I think that short was interesting. Then it started to work, and so then it worked really well. And I think even on that huge volume flush out when we're below the lower Bollinger, that's interesting as a long. None of these were A+s, right? The GNLN I don't think is an A+ anywhere either, but all these were worth covering. So we saw a huge smattering, whatever, of plays and different types of plays. If you guys had to study anything, I cannot stress enough to study that panic. Rewatch that free video I made. Rewatch the prep video of why I liked this Bank of America. Rewatch why I liked Apple so much. Then even from this video, really internalize why that 201 to 202 flush the next day is so interesting to me. Study the Lumen. If I had to rank some of this stuff, and the VIX, of course, /NKD was probably the best stop. Apple and Bank of America were really, really up there. SOX L was great. The VIX was really amazing. The Lumen was really, really good. All the other things I covered today, the SMCI and the SAVA, the PCRX, those are so many levels lower. I would give the rest of those trades maybe B's or C's, when like Apple, Lumen, and the VIX, those were like A pluses to me. I can't stress enough like how huge of a gap there is. So look, definitely learn and think about and incorporate some of the things I'm saying. There's lessons to learn everywhere, but do not underemphasize how incredible I think stuff like Lumen and the VIX and Apple and everything else was. Huge month. Like I assume that's the craziest trading we're probably going to see this year, and it could be many years to see something crazier. That was like some real deal panic. It does not happen all the time. So there you go, folks. This ended up being a super long video, but yeah, let me know if you have any other questions. A lot of good stuff coming down the pipe, and we are crushing it full speed ahead on Magnum Opus. So thank you as always for the support, and see you next time, friends.